Hello and welcome to Your Stocks live from the CNBC-TV18 Motilal Oswal studio. I'm Arundhati Ramnan. But before we get into all the stocks and the queries that we have today, let's take a check on what the markets are doing currently. Absolutely flat. The sensex and the nifty completely flat with a slight negative bias. You know, the nifty opened the day touching 26,000, but ever since then failed to hold that momentum. It's now below the 25,950 mark. It's just in the red. If you take a look at that mid-cap index, it's also 0.1% lower. It's underperforming those benchmark indices by a slight bit. But the Nifty Bank over there doing slightly better, managing to keep its head above water the whole day. It's about 0.1% in the green. But that's how the markets are doing. The auto stocks are doing well. That's what's leading the pack higher. And we've got those hospital stocks as well doing well. But joining us today to answer all of your queries are Ruchit Jain of Motilal Oswal Financial Services and Parthiv Shah of Tracom Stock Brokers. Gentlemen, thank you so much for taking time out and being here with us on the show today. You know, let's get straight into it. Our first query for the day, Deepak Keshan writes to us from Mumbai. He holds 8 shares of DCM Shriram at an average price of 201. His question is, should he continue to hold the shares for the long term or should he sell them? Parthiv, we can start with you. What do you make of this query?
Very good afternoon to you all. Yes, we are very upbeat on DCM Shriram as a company. I think it's a very well managed company. They have different divisions starting with sugar production. They are almost 42,400 TCDs in terms of capacity with 550 KLD in terms of distilleries as well. And it's been run pretty efficiently of late. They're not putting in new capex there. So that's a very prudent move. Even if I look into the other divisions, especially the chlor-vinyl, there they have products like caustic soda, chlorine, related chemicals like hydrochloric acid. And more importantly, I think of late, they've done a lot of downstream capex where they've increased the capacity for a lot of products like PVC resins, calcium carbide, epichlorohydrin, and epoxy resins. So all of this will contribute going ahead. We believe the valuations are extremely cheap because of a very downtrending chemical cycle. And it looks like I think the prices have stabilized. So going ahead, we expect a better run rate in terms of quarterly results as well. So I think this is certainly a company to hold on to. And the investor has invested at a very nascent stage. So definitely even the dividend yield from here would look very attractive. So certainly hold on for the long term.
So definitely must hold on to the long term. I've got Vinny in the studio as well. Vinny, our first query on DCM Shriram, and the call here is to hold that stock.
At least on the fundamental front. Yeah. So let's get the technical view now as well. DCM Shriram, Deepak is holding 8 shares of this one, right? Ruchit, what's your view for DCM Shriram? Should they continue to hold on the technicals as well?
Yeah, hi, very good afternoon, Vinny. Very good afternoon to everyone. Well, the longer-term trend definitely remains positive for DCM Shriram. Now, one observation that I was doing on the longer-term charts is that since post-COVID, since November or October 2020, the stock has not breached its weekly 200 EMA. And whenever there have been corrective phases in this last 5 years period, whenever there are corrections, the weekly 200 EMA acts as a support and the stock resumes uptrend from that. Now, that average support now is around 1,000 rupees. So I think from here on, even from a longer term perspective, the price-wise downside seems to be limited. 1,000 being a good long-term support for the stock. So till that is intact, I think the structure remains intact. So one can continue to hold on to the positions.
Okay, continue to hold on to the positions. That's the word even on the technical front. Let's move on then to the next query. We have Santosh, who is writing to us from Ghaziabad. He wants to know if he can invest in Paytm for the long term. Clearly, this is an investment query. Fundamentally, Paytm, what's your view on this one? Parthiv?
Frankly, I think we are not very comfortable with the current entry points and the current valuation. This is despite the fact that if I look into the internals of the last reported quarter, their gross merchandise value grew by 23%. Their net take rate moderated to 8.4 basis points from a very high of 9.1 basis points. Lending business continued to show stellar growth, of almost 10% quarter on quarter. And going ahead, I think the government-related subsidy in the PIDF scheme will not be replicated. But the management was very confident that going ahead, in terms of the monitorables, their merchant subscription growth should look good. Loan disbursement trends are looking very good for them. And the take rate should also improve. But our sense is, I think the valuations are elevated and the investors should wait for levels of 950, 1,000 for making an entry in a stock like Paytm.
So you think the valuations are elevated, but Ruchit, if I can come to you, any levels that look good for this person to, sort of buy into Paytm at this point in time?
The stock has good medium-term support around 1,050 range. So I think if we get any dip towards that 1,000 level, then the risk-reward ratio would become favorable to take any kind of contra trades for mid to long term. So I think one can keep a buy and dip strategy, and any declines towards that 1,050 can be used as a buying opportunity then.
All right. Okay, so let's move on to our next query then. Saloni writes to us from Goa. She wants to know the short-term view on UPL. So, Parthiv, from a fundamental point of view, what do you make of this stock? Is it a good stock to sort of bet on?
Yes, I think the fortunes for this company seem to be turning around. One, I think the management is now razor focused to try and reduce the elevated debt on a consolidated balance sheet. And I think they've made attempts in terms of getting a subsidiary listed and raising funds, which will help them to deleverage quite a lot, which is, I think, a positive sign. Second, I think the agrochemical cycle globally is looking better in terms of what it has witnessed in the past many years. And a lot of data points from the Chinese in terms of the intermediaries which goes into the global agrochemical manufacturer, the prices have reduced and probably the end product prices are looking up. So we expect the spreads to improve. Valuation wise, I think it is available very, very attractive as compared to a lot of the other listed agrochemical peers in the country. And in terms of the exports, I think it has very good markets. So we believe the valuations are cheap here and not only short, but we believe medium to long term, I think this looks really good.
Medium to long term, it looks good. Ruchit, what's your view for this one as well? Given that, every time UPL, you see it reach 800 in the last 5 years, then again it comes down. Now it touched 800 around that level and it's come down again. Obviously, not significant decline, but on the technicals, what should the viewer keep an eye on? Because it's a short-term view that they want.
I think a short-term pullback move towards that 800, 820 can be expected again. We did see some gap up opening, a few days ago. The stock is managing to hold its 20-day MA and the 50-day MA support zone. So I think overall, the broader trend for the stock is still range bound only, but 800 being the higher end of the resistance. And as you mentioned, I think that can be tested, which can be seen as an opportunity to book profits or exit over there. So at current levels, I would recommend to continue to hold in the position for possible up move towards 800.
Okay, possible move towards 800 is what you could watch out for. But let's move on. The next query from for today is coming in from Braja Abandhu Behera, who is writing to us from Bhubaneswar. Now, he wants to know why Heidelberg Cement, the stock price, despite decent numbers, has not managed to do much. Fundamentally, what is the view on Heidelberg Cement? Despite earnings being decent, not managing to see a good up move. Parthiv, what's your view?
Vinny, it's very clear that any cement player, what is the key ingredient for re-rating in terms of getting very good shareholder returns is the capital allocation and continuous organic and inorganic growth. Heidelberg Cement, I think, no doubt, it's a very efficiently run company. It was an acquisition by the German Heidelberg Group to Mysore Cements, and after which they've done a lot of debottlenecking and tried to do their best in terms of improving the operational efficiencies. But beyond that, probably the parent has refrained from further allocating new capital or going for any expansion plans, and their capacity and their market share has really shrunk. And probably always Heidelberg Cement has been considered as an inorganic acquisition play, which has also not materialized since quite long. And that is the key reason that despite a lot of other well-run frontline cement players have done extremely well, Heidelberg Cement has really struggled. Our sense is, I think, the investors better off looking into other well-run names like, say, Ultratech Cement, Ambuja Cement, or for that matter, even Ramco Cement. I think these are the type of stocks you should look at who are eyeing a lot of growth organically as well as inorganic.
All right. So you're saying there are other stocks to look at. But Ruchit, if you could tell us, this stock has seen like an 18% fall in the last 1 year. If you could sort of say, are there any levels you think that this person can enter this stock? Or do you feel that he should altogether look at another cement stock itself?
I think you should altogether look at some other stock because, when a sector moves positively and if there is any stock that is not performing or showing a relative underperformance within the sector, that clearly indicates a lack of buying interest in the stock. So Heidelberg has been forming that low top, low bottom structure. 180, 185 technically was an important support, which has recently been breached. Then 145, 150 is where the next major support lies in the stock. Comparatively, I think shifting to large cap stocks such as Ultratech Cement or Grasim would make more sense, where overall price structures looks much positive, and we can see that whenever there is a rally in the sector, the leadership comes from the stocks such as Ultratech or Grasim. So better to stay with the leaders rather than laggards.
All right, better to stay with the leaders rather than the laggards. So definitely to look at another cement stock and not Heidelberg Cement. But gentlemen, on that note, we have to take a quick break, but we'll answer more stock queries on the other side. Stay tuned.
Welcome back to your stocks on CNBC TV18. Like you can see the headline indices for y'all. Nifty 50 managing to hold on to a slight bit of a gain. This is what the trend has been this morning. Very range bound. But sensex, that's trading in the red. The bank side, that is trading with mild gains, while mid cap and small cap, that continues to be under pressure in the trading session. A bit more of an underperformance there. But let's keep it going with your stock related queries. And we still have with us Ruchit Jain as well as Parthiv Shah to answer all those doubts. Let's move on to the next one then. And this next query is coming in from Venkatesh, who's writing to us from Chennai. He's holding 80 shares of Afcons, and this is at a price of 456 rupees per share. Wants to know whether to hold or book his losses. Parthiv, Afcons reported their numbers also yesterday. It was not anything exciting there. Today also the stock is down 2%. They're already making a loss on this one. What is your view now?
Vinny, absolutely. I think only looking at the order book is not the best way to study an infrastructure company. Afcon, despite the fact that it comes from pedigree of Shapoorji Pallonji Group, kind of has struggled ever since it IPO'd, and post which it did get some decent orders, because in terms of size and capacity, I think it has substantial capacity, especially in the marine and port facilities, and also in the transmission line segment. But when you look at the execution, I think the ROEs are below lower single digits, and even I think the margins also are pretty volatile. And probably that has been the key reason why the stock has languished at a point in time when a lot of other such infra players who have better execution, better working capital cycles, I think have done extremely well. So I would suggest the investor to look into a company like Larsen and Toubro, which is currently sitting at an order book of upwards of 7 lakh crores. Their execution ability has improved a lot. The management is razor focused to look at net working capital cycle as a percentage to the sales, and it has improved constantly. The cash flows have improved. So certainly look into L&T as compared to Afcon.
All right. And, you know, Ruchit, he holds 80 shares of Afcons at 456, right? That stock has fallen more than 24% over the last year. So at what level should he sort of book his losses if you think that's what he needs to do?
There's a clear low top, low bottom structure indicating that the stock is still in a downtrend. Any kind of pullback moves towards the 50 DMA, I think that should be taken as an opportunity to exit, since the trend is not positive. The DMA resistance will come around 360, 365 kind of range. So any pullback towards 360, 365 can be used to exit.
All right, so that's what he needs to use to exit that stock. All right, but our next query is coming from Raghavendra Rao, who writes to us from Hyderabad. He holds 300 shares of BSE at an average price of 217 rupees. He wants to know if he can dispose the stock at the current price and book profits, or should he keep it? So let's start by getting the fundamental view, Parthiv.
Certainly, I would suggest the gentleman to hold, because one, his entry point is extremely low, is sitting on very, very good returns. And also, I think these are fantastic free cash flow generating machines, and especially BSC in terms of its execution ability since the last 3-5 years has been doing extremely well. You look at the transactional charges growth, I think that has been stellar. and it has dwarfed, no, this comes from a small base, but it has definitely dwarfed what NSE has been reporting. Plus, I think the services to the company income has also gone up a lot. So if you look at the internals, the sales growth has happened to the tune of almost 56%. And there is a classic case of operating leverage kicking in because the profit growth has grown at 70%. Going ahead, no doubt, we do expect some sort of moderation with the languishing market right now. But our sense is it's quoting at a trade multiple of 58 and a forward multiple of around 45 times. It's not prohibitively expensive. So I would certainly suggest to hold on to BS.
Okay. And, Ruchit, what's your view coming in for BSE as well? What should the viewer do? Average price is 217. Should they continue to hold this or book profits?
Yeah, overall, the sectoral outlook looks quite bullish. If we look at the Nifty Capital Market Index itself has given a breakout from a consolidation, and hinting that the segment should continue its uptrend. And the stock has been an outperformer. And high top, high bottom structure still continues. So no signs of trend reversals. Looking at it by his buying price, I think no, he does not need to worry much about the short-term consolidations if happen. But since the outperformance could continue, it's better to hold on to position and ride this trend.
Okay. Let's move on then to the next query. We have Jayakumar, who's writing to us from Kerala, holding 1,000 shares of Piramal Pharma. Price is 208 rupees. They're making a loss on this one. Should they continue to hold this or exit? He can wait till 2027 March, so one more year time period where he can hold on to. Piramal Pharma, Parthiv, is that a bet you would be looking at? Because they've spoken a lot about CDMO side, this coming in as a beneficiary or play for CDMO, but we've not seen that coming in the stock or that great in terms of numbers as well.
Oh, yes, 2026 was a difficult year for PPL Pharma, and the management did acknowledge the fact that there was a major inventory destocking in one of their large on-patent commercial products. That is kind of easing out right now, and slower early stage CDMO orders in H1. They believe that H2 should be a lot stronger because there was some inconsistency in terms of US biopharma recovery in terms of the funding. And there were some regulatory delays in the inhalation anesthesia. I think all these multiple reasons kind of plagued the growth for 2026. But on an FY27 basis, I think the management is a lot more upbeat. They're looking at early cycle green shoots in CDMO. There's been pickup in RFPs and order inflows. So especially because the gentleman is willing to wait for 1 year, we believe this will be the year of turnaround for Piramal Pharma. And I think definitely a lot of other segments are also doing reasonably well. So I would suggest to hold on for at least 1 year. Try and cut your losses as far as possible, but at least hold on for 1 year.
So you suggest holding on for 1 year. But Ruchit, what would your view be? Is there a level at which he should exit? Because he's got 1 year to hold the stock and he has time to see whether he wants to exit or hold. So would you say there's a level at which he should exit or continue to hold the stock?
Recently, the stock has seen a decent price raise correction from the highs. But what we can observe a positive divergence where the prices are making new low, but RSI is making higher low. And generally, such situations lead to a pullback move, at least in short to medium term. So, pullback move towards 200 EMA can be expected in this, which is placed around 185 to 190. So, I think around 190, he can take a review again whether he should exit there or not. But at current levels, I would recommend to hold and take a review around 185, 190.
All right. So you would recommend to hold right now. But let's go on to our next query then. AY Sakaria writes to us from Kerala. He holds 2,000 shares of Kitex Garments at 220 rupees and wants to know the view on the stock. He can hold it for another 6 months. So let's start with the fundamental view. Parthiv, what do you make of this stock? Do you think he should continue to hold it?
Not really. We don't like Kitex Garments, despite it being the world's second largest manufacturer of cotton and organic cotton ready-to-wear garments for infants and children's aged between 0 and 24 months. Somehow, I think the performance has been languishing, and no doubt, I think the stock was like under pressure, especially post the additional tariff duties that were levied. And after the duties are kind of now removed, and now we are sitting at 18%. The US geography, from where it generates almost 65% of its business, I think should do well, but we are not very comfortable in terms of the current entry level valuations for this company. As a matter of fact, in the textile space, we are more upbeat on the home textile theme. And in that, I think players like, say, Indocount, we believe should have an upper hand and should do better in the long run.
Okay. home textile players is a better bet in the long term. That's the view from Parthiv. But that was the last query for today. Ruchit as well as Parthiv, thank you so much as always for joining us on the show, helping our viewers get those answers which they are stuck on for a while in terms of stocks. Thanks so much for that. But with that, we're absolutely out of time on this edition of Your Stocks. Remember, you can always email us your queries or WhatsApp us on the number that's at the bottom of your screen for you all as well. Thank you so much for tuning in. Up next, we have closing bell to take you to the last hour of trade.